This is the PR Podcast, a show about how public relations helps you tell your story to the world. We talk with great PR practitioners who have the skills, creativity, and just plain savvy to get their clients noticed. Now here's your host, Jody Fisher.
Hey everyone, and welcome to the PR Podcast. I'm Jody Fisher. Thanks for joining us. Well, if you'd like to be a guest on the PR Podcast, we would love to hear your pitch. Now, we talk about how the news gets made. At least that's the tagline for the show. And it mostly focuses on media relations, but we scribble outside the lines a little bit there. We talk about general communications, right? Whether that's on social media, whether that's how you get your SEO game going so you can find the audiences that you want. You could be maybe a master newsletter writer. Who knows? So broad umbrella or big umbrella is communications, right? But we want to talk about how we reach the audiences that we want to reach in a more effective way. And media relations is part of that, but it's not the whole thing. So make your pitch by sending me an email, jody@jodyfisherpr.com, or through one of the socials at the PR Podcast. Let us know you want to be a guest on the show. Tell us like 3 things you want to talk about, right? Don't just say, hey, I want to be on your show. Tell us why you want to be on the show. Tell us what you're going to talk about. And obviously, the more unique, the better. Am I allowed to modify more unique in that way? I'm going to run with it. In any case, make your pitch to be a guest on the PR Podcast. We'd love to have you on. Now, let's get on with our show for today. We got a terrific guest. Scott Powell is president and CEO of Skyline Corporate Communications and one of Business Insider's top 18 public relations experts in the U.S. With more than 25 years of Wall Street experience and a global portfolio spanning more than 200 public companies, Scott brings unmatched insight into investor relations and corporate communications. He is fresh off attending the ORY APAC U.S. conference in Singapore, co-hosted by NASDAQ, where he explored how AI and cross-border collaboration are reshaping capital markets. Scott, welcome to the PR Podcast.
Thank you, Jody. It's a pleasure to be on the PR Podcast. Thank you for having me.
Of course. Now, if there's a business that is always moving and changing, it's the financial markets, right? It's like
Absolutely.
Literally minute to minute. It's kind of like a newsroom in that way. I don't know. It's constantly shifting, constantly changing. There's always something new. Tell us about how you and your business work with your clients and how you help them keep up.
Absolutely. So we work primarily with public companies, so mostly NASDAQ and NYSE listed companies. And I like to say that as an investor relations and corporate communications firm, we have 2 primary objectives that we prosecute for our clients. One is to help our clients communicate more effectively. So to write better press releases, have a better PowerPoint, better website, better verbal presentations at conferences or when meeting with investors. And secondly, we like to help our clients communicate to a wider investor audience. And we do that through helping them get media interviews, TV interviews, radio interviews, helping them with social media content creation, helping them attend the right conferences, meet the right investors when they come to New York City, or meet them through virtual presentations. So essentially, it's those 2 things at a high level, helping them communicate more effectively with the financial community and help them communicate more broadly with the financial community.
Well, if there's one thing that can set a company's stock price on its bad press. You see it all the time, right? Can you run down, or do you have any, for instances, not naming names or, embarrassing the guilty here, but, or maybe even situations that you've seen that are not your clients, situations where bad communications equals bad business?
Absolutely. We've seen it over and over again. I won't mention companies by name specifically, but for instance, in the auto industry in Detroit, there have been a number of auto manufacturers that over the years have prioritized profits over safety and have ignored certain safety issues with their vehicles in order to maximize profits, as opposed to having recalls or having major design changes. And I think some of these companies thought that they might sort of be able to get away with that, and they made a decision that it was cheaper to let their customers get hurt through various problems with autos versus fix the issue. But then when this got out, when this was brought to light, it created a major PR crisis. It causes severe reputational damage in some cases, not to mention the share price degradation or decline that often occurs. We've seen it in the airline industry without mentioning any names specifically. We've seen major safety issues that have arisen with particular US airline, and the handling of that created some very negative PR around that particular company, and a number of incidents that they've had with one and maybe two airline types. And instead of coming out and saying, here are the issues, we recognize the problems with this aircraft, and here's exactly what we're doing to fix these problems, they weren't as forthright, perhaps, as they could have been. And that's created some trust issues with the flying and driving public for the auto and airline industries domestically. And so, sometimes how a company handles bad news or handles internal problems, and the prioritization of profits over safety, can often create some major PR problems and challenges for public companies.
And it's situations like those, and we've all had clients like these, right? When something bad happens, whether they had a hand in it or it was something completely external that they have to deal with, clients tend to want to hit the button, the reset button, and say, make it all go away, make it all better, right? And certainly when stock prices are on the line, probably even faster, right? How do you counsel? And we all know that can't happen, but how do you counsel your clients through that process? How do you talk to them about, okay, we've either got a problem that has happened or we see a problem that's coming. How do we get ready? How do you walk them through what they need to do to make that, let's call it, bad news not so bad? And
And
to
that's a great
actually and to rebound and react better.
It's a great question, and it's a balance between human nature and sort of reflexiveness to bad news, and what you should be doing as a corporation and your obligation that you have to your customers and to your shareholders. And it's something we spend a lot of time counseling executives, and it's a challenge not just for small companies but for large companies as well, that you would think have significant training. I published an article probably 10 or 12 years ago at this point, and the title of the article was "The Importance of Getting in Front of Bad News." And just as you mentioned, Jody, the reaction, the human reaction to bad news is to say, "Oh, wow, well, I wish this would go away." You deny responsibility. It wasn't me, it wasn't us, or maybe it was, but I don't think we really were that responsible for it. And there's this denial, this avoidance of this news. And that's actually the wrong approach. And the reason for that is because investors and the general public are smart. They understand when things have happened, and they can feel when companies are trying to avoid blame. And we've counseled companies in this article that I wrote a number of years ago. It's very important to take ownership for a mistake. Maybe it was directly your fault, maybe it wasn't, but you still had some role in the negative outcome, whatever it might be. It could be a data breach, it could be the loss of a major customer, it could be an environmental, look to Exxon Valdez from years ago. It could be an environmental disaster, a whole host of things that could happen. If you look at the Tylenol incident going back into the early 80s, when Tylenol, the aspirin was laced with cyanide, a number of people died from the ingestion of that. These companies handle these crises in different ways. The Tylenol example is a good one. It was owned by Johnson and Johnson, and what Johnson and Johnson did is said, "Stop the presses. There's a problem here. We admit there's a problem. We know there's a problem." They stopped production. They pulled all the Tylenol from all the shelves across the United States at a huge cost to the company. But that was the right thing to do, because it showed that their interest was in protecting their customers. And their customers make their business, right? Without customers, you don't have a business. And they made the right decision. They prioritized their customers over profit. We don't always see that. And they handled it in the right way. And again, going back to the article that I wrote, they got in front of it. They got in front of the bad news. They owned it, and they said, and they also explained exactly what happened. Okay, we think that during the production line, there was a disgruntled employee that may have laced it because he or she was, being fired or was being laid off, or something negative happened. They said that now they have a potential solution to this. This is when they have the tamper seal. This is when the tamper seal tops came into aspirin and other pills. That was sort of the incident that prompted the invention of that keeps us safe. It has the tamper-proof seal. It
And
has
those
the
things run
plastic seal.
everything now.
Exactly.
Everything, right?
It's on everything. So, getting in front of bad news, owning up to it. but also explaining what happened so investors can understand, okay, this wasn't something malicious. This was accidental in most cases. And here's what we're doing to fix it. And that instills confidence that it's unlikely to happen again, whatever it might be. Could be a data breach, could be, like I said, the Tylenol incident, could be safety with equipment that we use, whether it's construction equipment, airplanes, cars, motorcycles, whatever it might be, that they're rectifying this issue to make it safer for us to use and operate these particular drugs or computers or whatever it might be. And that can help a company get through a crisis. It can also instill confidence and even win supporters that understand and recognize that the company did the right thing.
It's a great example. It's a textbook example, right? It's probably the greatest example of crisis communications and crisis action in all of
Absolutely.
modern history, I would think. It was just for all the reasons that you just
Yes,
outlined.
absolutely.
Let's go to the other end of the spectrum, bad things happening and how you react to them. Let's go to the other end of the spectrum and talk about news that ain't quite news. Like, and oh, we just got, I don't know, product launches are news. There are other things, but like things that your client comes to you and goes, "Oh wow, this is really important to us." And how do you when it's not quite there, no one's going to write about this. How do you counsel them through that, and how do you try to help them turn it into news, especially within the context of the financial markets where you were?
That's another great question, Jody. And this is something that comes up on a regular basis. Clients come to us. Oftentimes, it's desperation isn't the right word, but it's sort of out of a lack of other corporate news, and they're trying to announce something to their constituents. They're trying to get some news out there. They don't really have anything that is that significant, so they're often grasping at straws just to try and get something out there. There are a few different approaches to this. If it's a legitimate development or event, maybe they're attending a trade show, maybe they won a local award, probably doesn't rise to the level of issuing a press release or going out to the media and saying, "Look, we won this particular award." They could post on social media, right? And so that's seen as an option to push out sort of mid-level news, if you will, maybe news that isn't going to move the share price, it isn't really going to impact the company's revenue or earnings going forward, but is a nice feather in the cap. And so maybe put it out on social media. In other cases, it just isn't news. No matter how they try to cut it, it just really isn't worthy of going out anywhere. And sometimes we have to tell them, look, this just isn't, really worthy to put any place. And if you do, you're going to erode credibility just a little bit. Because maybe you do it once and that's okay. The investors aren't that disillusioned. They read it, they say this isn't really meaningful news. This doesn't really impact the company in any meaningful way. And maybe they can get away with it once or twice. But if they constantly do that, then it becomes a situation where investors just start to ignore the company news. And then when they have good, it's like the old allegory of crying wolf, right? When they keep saying, the wolf is here, the wolf is here, and then when finally they have good news and the wolf is there, people aren't going to pay attention or take them seriously. So that's an issue as well. And so we counsel them that can happen if they continue to do that. I think the third option is we can aggregate news and issue a release that has several different pieces of news that on their own don't really warrant a press release, but together tell a story, right? They gel and they sort of all fit together like a puzzle. And these four pieces of news that on their own maybe aren't that important, when woven together, can often tell more of the narrative about how the company is looking to push market share, how to develop new products, and how to sort of execute on their growth strategy. So those are generally the three different ways that we counsel companies when there's this type of news.
That last one is a great idea because I think, and we had talked about this prior to the taping, is that it contributes to this broader story arc about what the company is all about. And that it's not just broken up into these granular pieces of, well, this thing happened and that thing happened and that thing happened, right? Do you like doing that with your clients when, like you said, there's kind of everything else is a little smaller, but all put together, maybe it's got a something?
I like doing it. It's like that puzzle. When investors are only seeing one piece of the puzzle, okay, this is probably the head of the bird, and this is probably the tail of the donkey, and you know, we kind of know, what this piece is. But here we are, in a sense, making it easy for investors to see the whole picture, and that's what it is ultimately, right? Corporations are complex beings, and they have operations, they have earnings, they have management, they have HR, they have PR, they have a lot of different facets to them, but they're all essentially focused on growing the customer base, developing a product, maintaining the customer base, growing profits, growing market share, improving product quality and safety, and so forth. And so anything that we can weave together that shows the movement forward, the execution of those corporate objectives, can be very good and meaningful for investors, because they can start to see the whole picture, and they can start to see the underlying parts. And the more they can understand about a company's operations, the more they can understand where the company fits in the ecosystem. Generally, the more comfortable they become, the more educated in a sense that they are with what the company is doing, where they fit in the ecosystem, where they fit within the competition. Helping educate them and how the company is differentiating itself can often engender more confidence with the investment community, and it can often lead to a broader shareholder base for that same reason.
Something else that I just thought of, you work in a very highly regulated environment. I mean, the press releases that I might write for a nonprofit client that has to just get the okay of the CEO, you've probably got multiple levels. I know you've got multiple levels, and different people in the C-suite at the very minimum have to be looking at this for a variety of different pieces of information and making sure that things are okay to send out. Talk to me about that highly regulated environment and how you keep the process moving forward. I got to imagine it's very easy to get something like a press release bogged down in red tape.
It can be, and it's another good question, and it's something that a lot of people just don't understand the process of moving a press release from an idea or an event, if you will, something that's occurred or is about to occur, and then turning that into a release that goes out through a major newswire. And you're absolutely right. There's a lot of regulation around it. Generally, what happens is, in most cases, the company will say, Scott, Skyline team, here's this event, whatever it might be. We have a new board member. We're entering a new market geographically. We're moving into a new country with our product or service. We're launching a new product. Whatever it might be, it's a major news announcement. And so the company will generally send our team 4 or 5 bullet points. And from who, what, when, where, and why, to sort of make it simple. And from that, we write the title of the release. From that, we write the introductory paragraph. We might write a subtitle. We'll write the quote for the management team that helps articulate, generally the CEO's words, what is this event and why is it impactful or meaningful for the company? Why is it important for the company going forward? And so generally, we will then do a first draft, send it back to the company. There, you generally have the CEO and perhaps the CFO, perhaps the head of investor relations or corporate communications review it. So you may have 3 people internally reviewing it. If it's an operational press release, maybe the COO is involved. If it's a biotech company, maybe the chief scientific or chief medical officer will be involved in that. So internally, they sort of go through it, redline, make some edits, maybe make some changes, maybe deepen some of the narrative in there, especially if it's a scientific release or a technological release. They'll then kick it back to us for our thoughts, our review. Once our team and the company has decided on final version, it generally goes to their legal counsel, and their legal counsel does a check to make sure that they're not embellishing too much. They're not making any statements that are sort of too embellished or too aggressive in terms of the statements. They'll
I
usually tone it
remember
down.
seeing releases coming back from legal and being like, "Oh my God, you dismantled my whole narrative."
I know. Well, the joke is the lawyers will come back and say no. They say
Yeah,
no to
right. That would
everything.
be easier, right? Getting a document back that just entirely read.
Yeah, it's usually not that bad in the public company space, unless it's something really sensitive like an M&A transaction, where there could be certain sensitivities or certain disclosures. But otherwise, if it's some of the developments that I mentioned, legal will usually kind of tone it down and add protective language or take out language that they deem as a little bit, maybe a little bit too aggressive in terms of the forward-looking statements or the language. Generally, the company accepts all of the legal changes. and then we queue it up with a newswire. There are 8 or 10 major newswires across the U.S. And then simultaneously, while it's being queued up and going through editorial, we usually notify NASDAQ or the New York Stock Exchange, because generally, depending on the time of the release, the exchanges like to be notified by receiving a copy of the press release in advance. So that's another layer of compliance. And then it hits the newswire, and hopefully it's well received by investors because it's well written, it's meaningful, it's impactful, and hopefully the share price reacts in accordance to the importance of the news.
Well, and there's where the rubber hits the road, right? Your news goes out and it has an immediate, potentially, an immediate impact on the stock price of a company. Um, that has got to that's got to keep you up at night, right? How do you deal with that kind of
Well, I would say the stress is a little bit more on the company management side, because they're the ones that have the equity ownership and the skin in the game, if you will. So I can tell you, we certainly get nervous if we have to put out some bad news, for instance. Maybe an M&A transaction is terminated. We had one situation where we had a fairly large technology company, and a very, very, very well known venture capital fund that's part of a gigantic $1 trillion market cap publicly traded company. So there's only a few of those. You can guess which of those it might be. Had made an initial round investment in my client company, and they had an option to make a second round investment into the company. And investors were waiting with bated breath. Will this very famous venture capital fund that's part of this very well known public company make the second investment? And it was sort of almost like it was reputational. Like if the fund decided to invest, it was this validation of the company's business model, and if they didn't, it was sort of this invalidation of the company's business model. And we were trying to coach investors. It's not. And ultimately, they decided not to make the investment, and we had to message that to the investors. This is a big NASDAQ listed company, and it was a big venture capital fund. And we had to message that they decided not to make the second round investment, but that it was not an invalidation or a disappointment with the company's technology. We had to message that the company was simply too large now as a public company to really fit the venture capital fund's investment thesis. They don't invest in large public companies, right? They invest in smaller private companies with unproven but promising technologies. And this was a company with proven and profitable technologies. And so that was the difference, that we had to message that to investors. This wasn't a disappointment with the company's technology. In fact, it was the exact opposite. The technology was so successful, the market cap was in the billions, that it was too late stage for this venture capital fund to invest in. And from the original investment, the company just grown very rapidly over the past 2 or 3 years.
how did that play? How did that go down?
Well, it made for some very difficult days from my side, because I had calls there were about 12 analysts that covered the company. There were a lot of big institutional funds. So some of them had my cell phone number. So it was a mix of some very interesting and colorful text messages that I cannot repeat or share on this podcast. That would come because some of these investors and some of these funds had my cell phone number. Just the cell phone numbers get out as you return calls because you're on the road and you're not using your office line and things like that. So, and then there were a lot of voicemails that were piling up because I was on the phone with one investor, and 5 others were calling at the same time. So it was a very difficult process. It's one of the hard parts of investor relations. It's when there is a negative event or negative news, and people are very emotional. They're very upset. They're very confused. They want answers, and they want answers immediately. And it kind of goes to what you were saying. News flow disseminates immediately. Stock prices react immediately. Investors want answers immediately. So it was a difficult couple days. But what we did is between myself, I was the external investor relations agency, and then the CEO and the CFO of the company. Between the three of us, we were able, over the course of 3 days, to get back to all of the covering analysts, all the major shareholders, explain the situation. And in terms of share price performance, the stock dipped a little bit on the news. We issued it, I think, on a Monday morning, and the stock was down maybe 6 or 7%. But by Wednesday or Thursday, the stock was actually above the price on Friday, where prior to announcing the news. So I think we did a very good job in terms of handling what was perceived by investors as a crisis, but really wasn't a crisis, and explaining to investors and analysts why this really wasn't a crisis, although it seemed to be. And it sounds a little counterintuitive. How could something that's perceived as a crisis to investors actually not be a crisis. But when you think about and explain, the investment thesis of different institutional investors, it makes a lot more sense. And once we explain that, their concerns were mollified to some extent. And then we use that opportunity to say, look, we've explained the situation to you now, but let us tell you about the exciting developments that we have coming forward for the next 12 months for the company. We have you on the phone now. We've talked about this previously. You've forgotten probably about this because this negative event has taken up all of your time. Let us tell you about the new products that we've announced this publicly, but let's remind you of this, remind you of where we're going with the company's growth trajectory. And you can turn sort of a very negative situation into a mildly positive one.
That is a nice pivot. I love that story. And I'm gotta think as I'm listening to you tell that story about the stock price, the negative news, the stock price dipping, and then pinging back, coming back to higher where it was before. The underpinning of all that has got to be the reputation of the company. That and that's months, if not years, of work on the part of you, the CEO, everybody involved to lay the groundwork for people actually believing in the company so that when something goes bad, it doesn't actually go off the cliff. There's a temporary setback, but it actually bounces back. Would you agree?
Absolutely. And it goes back to the article that I wrote, the importance of getting in front of bad news, that when historically how a company's behaved, determines to a large extent their current reputation with the investment community. And if a company is transparent, just like in business, I tell people this all the time, and there are certain people I personally won't do business with. It's just like in the business community. If you have integrity, if you admit your mistakes, if you tell people that you're sorry and here's what I'm doing to make sure this doesn't happen again, that builds your reputation. And then when something potentially really bad happens, people trust that you, as a person, as a businessman, as a businesswoman, as a public company, as a public entity, whatever it might be, will handle it in a way that you will take, a lot of constituents' impact into account, and you will try to do the right thing. So and we counsel this when we have public companies. They still call me, Scott, we have something negative to announce. How do we spin this? How do we hide this? And I say, hold on, this isn't about spinning and hiding. This is about explaining, right? Explaining what happened, so that because we're all human beings, we all make mistakes, we all will make mistakes till the day that we die. Okay, but the important thing is to help understand, how did this mistake happen? Right? Was it complete negligence on our part? Was it malice? Was it intent? Or did this just something negative happen that was unexpected? And investors can understand and forgive, right? And then if you say, okay, this is what we're doing to fix this problem. We had a data breach. We're really sorry about this, but here are the new firewalls we're putting into place. Here's a new chief technology officer, chief security technology officer that we've hired to help with this situation. And by the way, let me tell you about the great things that we have coming down the pike. That's how you really handle these types of situations, in my opinion.
Fantastic advice. And I know we could talk lots more about this. Scott, thank you so much for joining us here today on the PR podcast.
Absolutely. Thank you very much, Jody, for having me on the PR podcast. It was a pleasure.
Of course. We are not done with you yet, however. We are going to segue now into the rapid fire question portion of our podcast. This is where we steal a page from inside the actor's studio. We ask our guests a series of rapid fire questions meant to elicit a simple answer, maybe a laugh or two. With your indulgence, Scott Powell, let's begin with rapid fire question number 1. What is your favorite news source?
Yahoo Finance.
There you go. From the financial guy, right? Rapid fire question number 2. If you use it, what's your favorite social media platform?
LinkedIn.
Love it. Rapid fire question number 3. Coffee or alcohol?
Depends on the time of the
day. That's a very good answer.
Coffee in the morning, alcohol in the evening.
There you go. There you go.
All in moderation. All in moderation.
Whatever floats the boat. Rapid fire question number 4. What's your favorite on the run food?
Oh, I hate to say it. Chicken fingers.
Those will work. Those will work. And rapid fire question number 5. What do you want to be after you finish this career?
I would say probably an educator.
Oh, any particular level or subject matter?
College. I taught. I was an adjunct professor for 4 years at Fordham University in New York City in their Graduate School of Business. So I think trying to impart wisdom and working a little bit less than I currently work when I get a little bit older. I think to give back and to still remain engaged, but not to work the crazy number of hours that I currently work.
Sounds like a good idea to me. Scott, this has been a great conversation. Please let people know how they can find you online.
Absolutely. So again, I'm Scott Powell, President, CEO of Skyline Corporate Communications Group, LLC. Our website is www.skylineccg.com. And my email address is very simple, scott@skylineccg.com. Thank you, Jody.
Thanks again, Scott. And thank you, everyone, for listening. Please remember to subscribe to the show. Connect with us on Facebook, Twitter, Instagram, and TikTok at The PR Podcast, and send us a question or a comment. Our intro is by Christopher Apple. You can find him and his fantastic photography on Instagram at Christopher_APPOLDT. Check him out there and hire him for all your photography needs. You can find me online at Jody Fisher on all the socials and on the web at jodyfisherpr.com. We'll see you next time on the PR Podcast.